Hi everyone, it's Friday, September 20th, 5 o'clock p.m. Eastern Time, so just after the aftermarkets close here in the U.S. Down day for U.S. equities on further Fed confusion. We'll talk about all of that, take a look at some setups that we have going on for next week. Please take a look at the risk disclaimer, which should now be on your screen, and then we'll go to some charts. Alright, let's start with the daily chart of E-mini futures. Alright, you can see here we had a pretty decent sell-off from those 1726 highs. E-mini futures are down about 0.75% today. We sold off right down into this supporting trend line. Dates back to really the 3rd or so of September, so a relatively significant level to keep an eye on. Below there, obviously, we then have the 50-day and then this longer-term trend line at around 1642 or so, which is also the 100-day EMA. So keep your eye out for those levels if we do see a breakdown next week. We're also testing these previous highs around 1705, a little bit below it, but you can still see that level has some significance. So what happened today with the markets? You can see this significant rally we had after the Fed meeting. All right, nice big bump up there. We've given back most of those gains. A couple things happened. The first was that the markets got a little bit more excited, I think, than they should have for the Fed meeting. It caught me by surprise. It caught a lot of people by surprise that they didn't reduce asset purchases. But the reason they didn't reduce asset purchases is because they don't think the U.S. economy is in particularly great shape. So you want to be a little bit hesitant about getting super bullish U.S. stocks if the Fed isn't raising rates because they're scared that the U.S. economy is that fragile. The other thing is, today we had a speech. We had actually two speeches. One from Esther George, the only hawk and the only dissenter, on Wednesday's decision. Which is, she always says basically the same thing, and the markets kind of ignore her at this point. The other speech we had was from Bullard, who used to be a centrist, now more of a dove. He's the guy who keeps talking about inflationary concerns. Today he came out and said that the Fed could still taper next month, October, though he sort of seemed to acknowledge that December remained more likely. If we do see the taper next month, that would be, again, another surprise. I really feel like, and most people feel like, the Fed is going to want to start making these policy moves in a meeting with a press conference, all right? And that's December, the quarterly meeting. Without the press conference, it seems like the markets will be kind of left to their own devices for a while without any guidance as to what a taper means. So I think it's relatively unlikely that we see anything on Wednesday. I also think that we just don't have enough economic data between now now in October to really change the Fed's mind. I mean, we'll have one NFP report, one inflation report, and if they're both come in, extraordinary maybe, but it seems somewhat unlikely to me that we'll get enough of a shift in the data to see the Fed really change their mind and decide to start tapering. So, like I said, it seems like December is the next best bet, though Bullard said, October. So the fact that it could be October sent the markets a little bit lower, and the fact that Bullard he did say that the difference between a $5 to $10 billion taper and then not tapering is not that significant. All right, so if the Fed doesn't think that it's that significant, maybe markets got a little overblown with it. I think that's a ridiculous statement. I think that the significance, sure, in terms of monetary value, not overly significant, but the difference in terms of what it means for sentiment and where people stand in the market going forward could not be any bigger. So I think it is a huge distinction, but Bullard seems to disagree. So that's what we saw today. Let's go to dollar yen. Okay, you can see dollar yen a little bit lower today. Rallied pretty significantly yesterday, though. Again, retesting this well-worn trend line here. All right, that's the second or third retest that we've had of it. It does look like it wants to head higher, so we'll have to keep an eye on that. Really below this 100-day EMA here at 98 basically is the major resistance, or major support. And then we'll have to get some topside resistance up here, but Dollar yen is definitely a pair that should be on your radar here going into next week. Other ones that you may want to keep an eye on: Aussie dollar. All right, sold off today. We go down to the 4-hour chart. Okay, we sold off into the 618% fib here. We've held, but we do have this gap. All right, we have an open gap that you definitely want to be aware of. Watch the 618% fib, and then watch this 50-period EMA here on the 4-hour chart at 93.44. All right, euro dollar, big spike higher. Big spike higher on obviously the Fed news, and then we've kind of gone sideways from here. So keep your eye on euro dollar for the opportunity of some sort of flag breakout. If we do continue to go sideways here, it's one of the euro's been pretty strong. So if we continue to go sideways for a little bit, may provide a nice entry for one last surge to the upside. If we look at like euro Aussie, all right, breaking up to the upside. Euro CAD also testing resistance but much higher. Euro pound. All right, again, breaking to the upside. So you can see the euro has been pretty strong across the board. Euro yen, again, monster candle here yesterday. Now, again, another potential to look out for some sort of flag to get higher. You can see we broke this wedge to the upside. We retested it. We broke out again. So keep your eye on euro yen as well for more upside. I mean, we could really easily see a move back above 130. I mean, really as high as 136, 137 without too much of a problem early next week. So keep your eye on euro yen for entries as well. All right, that's going to conclude part 1 of the video, so make sure you keep your eye out for part 2. I'll cover the rest of the majors there. See you in a second.